Hello, my fellow San Diegans. If you're buying property in California for more than it last sold for, chances are you'll receive a supplemental property tax bill. Oftentimes you can receive two. My clients for 20 years now have been asking me about this. It is very complicated, so that's why I finally put this video together and a little visual to hopefully help make it a little easier. Couple things to note is that the San Diego County Assessor's Office uses the fiscal year July 1st through June 30th. So for example, that's here all the way through the next year, June. So it ends up being basically for the year in two of our years, right? But that's what usually trips people up a little bit. Another date to notice is they send out their tax bill for the year, usually in October or November. So here in October, it actually covers this bill starting in July, it's already passed a couple months, through to the end of June. So now if you're a buyer and you're buying a property at $950, but your seller last bought that property at $750, that is easy math, $200,000 difference, right? Now, the county is not capable of reassessing value every day, right? We have transactions that close daily. It takes them quite some time. There's over 1 million parcels in San Diego County. So what you will do is you'll assume this seller's property tax bill, and you'll be paying your tax bill continuously at this number until the county catches up and then says, hey, wait, you actually owed me a little bit more money this whole time, and here's your supplemental property tax bill. So there is a calculation for that number. I can get you the calculator. It's basically this difference here times the tax rate of your neighborhood and times the remaining months left for that fiscal year. So there is, like I said, a specific calculator. We can get that to you if you're curious about the exact number. But always a good idea to set a little money aside when you buy a home because you'll most likely receive that supplemental tax bill. So if that wasn't complicated enough, if you close on a property between January to May, you can receive 2 supplemental tax property bills. And that's because you're closing in 2 different, or you're impacted, if you will, by 2 different tax cycles. So for example, let's say if you close here, this is 1 tax cycle. This is 1, so 1 here, and the remaining. So this is 1 tax cycle, and now this is tax cycle 2. Hopefully my drawing is simple enough, but this is tax cycle 1 and this is tax cycle 2. Now if you've closed in here, you'll pay a supplemental tax bill for your prorated amount here. Now remember, the city, or the county rather, is always delayed. So you'll be closing and paying your taxes through escrow at your old seller's value. And then they'll catch up and say, hey, wait, you owed me a little bit more, and that's 1 supplemental tax bill. But the county does oftentimes process the bills that they send out here in October and November. Remember that? They sometimes process those early. So if they process that early, they're not going to change it again. And the printing to print out over 1 million different tax bills takes months and months. So if that's already been processed, that's already on the books, and it's already still based on your seller's old value. So then that means this tax cycle that you've got a bill for, but it's still at his rate or her rate, now you have a supplemental tax bill for that as well. So hopefully that made a little bit more sense for you all. One thing to note is that if you impound your mortgage payments, your taxes, your supplemental taxes are not impounded. So definitely put some money aside, and hopefully this helps make it a little easier. We're always here to help answer any questions.